or has an existing line of credit, you want to subordinate it. Okay, so you're playing with the order of things. If you do not subordinate it, what happens? That equity line becomes first. Okay, so the subordination means equity line, go back to second. Does that make sense? Okay.
What's the question again? That one.
The advantage of a home equity loan over refinancing is less likelihood of default, the ability to pay off part of the total debt separately, tax deductibility, or a lower interest rate. Okay, so what's a home equity loan? It's a HELOC, a home equity line of credit, or a fixed one, which is a home equity loan. Okay, how easy are those to get nowadays?
Hard.
Those are hard. Okay, we have two lenders. They only lend up to 75% of the house. Okay, but there's an advantage. The advantage is that it's a very risky position. They can pay off part of the debt separately. It may or may not be tax deductible, depending on how they use it.
It's a higher interest.
God, I don't like this question. Yeah. Right now, it could be a lower position. Right now, because the prime rate is. Okay, so this question is very tricky. But think of it in a regular market. The ability to pay off part of the total debt separately is one advantage. Okay, I think of a homeowner that's starting a business. Let's say they start an ice cream shop, and then they make the money back and want to pay off that equity loan, so they can do that. An escrow account is intended to ensure the timely payment of taxes and other charges related to the property, or does not necessitate sending out any statements to the borrower, or protects the borrower in the event he is unable to make his tax payment, or is set up to assure the borrower's loan payments are made promptly. That's correct. Okay. Seller can sell the property at a premium or profit with Fannie Mae financing after 30, 60, or 90 days. We know FHA rules. FHA rules is 90 days, 20% profit allowance. This is just one of those you have to memorize. It's also 90 days. Okay. They go by the date of the contract, by the way. So if you ever encounter a deal, we've had lots of deals like this, where an investor bought the property, and then they turn around and sell it, and you guys are representing the buyer. Check the date. If they bought it, and it's within 90 days, you're probably going to have a problem. Okay, how do you get around it? You make sure you date the contract appropriately.
And another part where a lot of people make a mistake is the date of the contract is not the ratification date. It's actually the date when the contract is written. At the top right, I think, right? That's actually the date. So if the buyer signs on May 1st, the seller signs on May 5th, your contract is ratified on May 5th. That's not the date of contract. That's just the ratification date. So you go with the date that the contract is written.
You also need to reopen up escrow if you have escrow money in there. A lot of hassle. Okay, but it happened to me once. I mean, I don't check that stuff, but you pull the profile, look at the date, 90 days, you're safe. What part, this is a subjective question, I don't like this, but what part about short sale flipping is illegal, if any? Non-full disclosure to both seller and buyer, and manipulating market data, buying the property, reselling within 90 days, immediately selling for a profit. Okay, this is America. Let's look over the answers. There's nothing wrong with selling for a profit, right? Lots of people do that all the time. Buying the property, reselling within 90 days. Okay, there's nothing wrong with that either. So if you don't put full disclosure, and I would even add and lender, and old lender, or manipulating the market data, then that's illegal. So the answer is not full disclosure. Alright. What is the purpose of title insurance? Okay, this is a very tricky question. Okay, because this is Northern California. Alright. In Southern California, what happens, Tony? There's two different companies. There's escrow company and there's title company. Alright. But when you order title insurance, the purpose of the insurance part of it is to provide a guarantee. But as a service, they provide a history of what's on title right now. They don't necessarily provide a chain of title. Okay? The answer was provide a guarantee against liens. Okay? If a lender discovers the fire policy is not in effect, I'll let Lana answer this question. If a lender discovers a fire policy is not in effect, what can happen?
A forced place insurance.
What is forced place insurance?
Put their own insurance, which is like twice as
Higher.
At
twice
5 times the price.
Is it?
Wow.
Okay, so the lender puts their own insurance into
Less
the property.
coverage.
But it's a short sale. Do you need insurance on a short sale? Why? The homeowner is not making the payments. Why do you need insurance?
They need insurance.
You need to cover the insurance. Okay, what is the purpose of Federal Housing Administration? We just covered that. Buy loans, make loans, impose rate standard, insure loans. Okay, the answer is insure loans. Who buys the loans that are FHA? Ginny. What part of the application process is the GFE required?
3 days.
GFE stands for good faith estimate.
3 days of completion of the application.
Within 3 days of complete application. The best tools for the borrower to shop and rate compare are truth in lending, initial good faith estimate and final HUD, itemized fee disclosure. This is a tricky question.
Compare our
Okay? If you are shopping,
shopping only.
will you have a final HUD? No, because final HUD is when you close the deal. The answer is truth in lending. Okay? Okay, if they said initial HUD, by the way, that's the correct answer too, because you can get initial HUD. Fannie Mae and Freddie Mac have what guidelines for investment property? And guidelines change every day, so this question may be outdated already. 12 months PITI reserves, 90 LTV, 6 months PITI in reserves, or DTI max is 55.
6 months. 6 months.
The answer is 6 months. Just memorize that, okay? Owner occupied is 2 months. Investment property is 6 months. Am I right, or did the guidelines
I
change?
just got 12.
You just got 12? Okay, this question just became obsolete as we spoke.
So 6 months.
Okay. So if you're taking the test, it's kind of a gamble. His guidelines changed.
Yeah.
I don't know if our guidelines changed
And now
yet.
$6,000 shop.
And by the way, this is I don't know. I just want to say something. I mean, this is really interesting because you can buy an investment property with as little as
$50,000?
no 25% down. Okay, so I mean it's pretty crazy because even though the climate is awful, people can still invest. People can become investors.
This one you say 25% down. What is it again?
Conventional. You can buy an investment property, single family, with 25% down. So it's it's really
This one,
not that bad.
What was it before?
well
I never did
before it was as low
commercial.
as 0 down. Not commercial, just regular single family
Oh.
buying investment. So even though the guidelines are tough, like 12 months, there's still some good niches there. Okay, copy of the appraisal is provided when? A, at funding, B, close of escrow, C, when the appraisal disclosure is given, or D, 30 days after the application date.
C, close of escrow.
Close of escrow. Alright, PUD stands for Plan Unit District, Programmed Urban District, Plan Unit Development, or Planned Urban District.
Plan unit development.
Plan Unit Development. Who is the entity that administers RESPA? Doesn't that sound familiar?
Department of Housing.
Department of Housing. Is it
By the
recycling?
way, about the only RAC that is actually administered by HUD is RESPA. The rest of them, they were brought up, and I think it also appears on the question, it's the Federal Reserve, the Board of the Federal Reserve. But the enforcement for us, mortgage lenders and brokers, is basically by FTC. So RESPA is the only thing that's administered under HUD. The rest of them are most likely going to be federal, the Board of the Federal Reserve. But the enforcement is going to be under FTC, Federal Trade Commission.
The period between rate changes in an ARM is called the in-between period, changing period, relief period, or adjustment period.
Period.
Adjustment is the best answer. The cost of an appraisal paid outside of closing would appear on the HUD-1 settlement statement as POC. The question gave away the answer. POC. paid outside closing. What must the lender do when denying a mortgage loan application? Offer another loan for which the applicant can qualify? Refund the loan application fee? Refer the applicant to another lender? Provide a written explanation for the denial? The answer is provide a written explanation.
But if you are a loan originator for another lender,
You still have to provide a denial though for that, but you can definitely reapply with a different lender.
One question that has a relationship is related to that is what happens when you issue an adverse action, right? A denial, for example. They're gonna ask you whether they're gonna give you the FICO score, or they're gonna give you the credit report, or they're gonna give you the address to get. They're gonna give you the way to get your credit report. The answer is this: is they're gonna give you the way to get to your credit report, right? They're not gonna give you the credit report directly, or the FICO, or the notice of adverse action.
Okay, so they're going to give you a way to get your credit report.
Yes, it's
Okay.
actually written there. This is based on your credit
Information
report,
from
right?
Equifax.
This.
Yeah.
Yeah, this is how you can get it.
Okay, great. Each loan originator is identified in the NMLS database by a social security number, license number, a unique identifier, or an employing mortgage broker. It's a unique identifier. Yeah, that's a tricky one. Unique. Okay, that just means that we can't have the same NMLS number. When is a notice of adverse action required when a borrower applies for the loan? 60, 90, or 30 days? Answer is 30 days. Alright. When a self-employed person is a 25% owner of this business, okay, he's not majority, which of the following documents need to be reviewed to determine his loan qualifications? Balance sheet, profit and loss statement, tax return, articles of incorporation. Okay. The reality is everything needs to be reviewed. Everything. But for the purpose of this test, being a minority shareholder, the tax return.
The tax return will show the
Okay.
profit and
The tax return.
yeah.
Because the minority shareholder will somehow get that profit and loss transferred over to his return, either Schedule C, Schedule K1, unless it's a C corporation. Which of the following will be included in an escrow or impound account? Escrow waiver fee, flood determination fee, mortgage insurance premium, or origination fee? This is very similar to the other question. But what is inside an escrow or impound account? Well, we know escrow waiver from our last question was a cost, right? Flood determination fee? No. Mortgage insurance premium? Maybe. Origination fee? No. So the best answer? Mortgage insurance premium. Okay? Alright, here's a simple math question to warm up the calculator. If the purchase price is 100, appraised value is 150, the loan amount is 50, the second loan is 20, what is the CLTV? Let's take the loan amounts. 50 plus 20. That's 70. Do I divide it by the purchase price or the appraised value? Alright. Here's a question. Will the lender lend more on the house than the house is worth? No. In fact, when they lend money, they will take either the lower of the purchase price or the appraised value. Okay? So the answer is you take 70 divided by 100, you get 70%. Okay, you go by the lowest of the two. Lower of appraisal price or purchase. Appraised value or purchase price. Alright, how can one calculate the monthly income for an applicant who is paid an hourly wage? Monthly